Has Solana bottomed out and are we starting to see a trend reversal? Well, the only way to know is to know that you don't know. Then we can stay flexible with the market and make sure we are betting on the correct side. So let's dive straight into Solana. We're going to go into detail. So I'm starting off on a weekly chart with Solana. And the main macro viewpoint, and to remind ourselves, is markets are driven by fear and greed, a human emotion that just repeats itself time and time again. And fives and threes is what we're looking for again and again and again. And what we've had with Solana just has been textbook over the last few years. It's literally this five-wave movement up. It peaked in November last year, and it looks like a textbook A, B, C. The big question is have we reached the end of a wave C, or are we going to get one more leg to the downside? And that's what we're going to dive into in a bit more detail today. Now, just to note, we're going to dive into a daily chart. You can now get access to my Solana chart, and you can upload it into your own trading view so you can tweak it as you see fit. And you've got access to a few other coins as well. So that's in the description link below. So let's jump into a daily chart where we're going to look at more of the recent data. So the few things that I want to cover today. Firstly is pattern recognition. When you're seeing price behavior of buying and selling, it indicates to us what the market is feeling, what the crowd is feeling. So individuals are hard to predict, but crowds are much more predictable. And this is basically crowd psychology playing out. It's practical crowd psychology. So we've got this overlapping wave structure. When we see this, more often than not, because we can only ever do probabilities and never certainties, right? So to know, well, the only way is to know that you don't know, but we can stack the odds in our favor. More often than not, when you see a corrective wave structure like this, the previous low would more often than not get exceeded. And it hasn't been exceeded yet. We want to take that into consideration when we're looking at Solana. What we've had since, what was the date? Since 13th of August, is a really clear impulsive move down and down, right? So that's quite clear. So the immediate trend is down. There's no real two ways about it. But what is this recent move and what can it be? And what should we see it as? And basically, how do we make money from it? If we're trading, do we go long? Do we go short? What are the possibilities and how do we stack the odds in our favor? That's going to be really, really important to distinguish. So the first thing is, always trade. This is so important with the trend. The macro trend on the weekly overall is down like the last almost a year now. And the immediate trend, what we're looking at also is, well, there's like 2 degrees, right? There's the intermediate degree, which is down, and the micro degree, which is pointing up. We want to take that into consideration. So we're going to get really practical about this today. So I'm going to zoom into this part of the market now, because I've just done some basic analysis on fib time and fib price. And basically, again, keeping in mind markets move in fives and threes, right? And there's really only 2 outcomes that this can be. Where either we have bottomed out early and we've got something called a 5th wave failure and this low is going to hold, or what we're seeing is just a correction and then we're going to get a continuation to the downside. So like, how do we use this information to, do we go short? Do we go long? Do we just stand aside? What do we do? Well, one of the secrets I use that really gives us the edge is momentum, right? There's thousands of momentum indicators. By far, my favorite is the stochastics RSI. It's this blue and the red line. Again, when you download my chart in the link below, you'll get these settings as well. And what it basically tells us is the rate of change. And when the momentum is pointing down, we want to only look for short trade setup if the pattern in price and time is also pointing down. And if we get a bullish reversal, then we only want to be betting on the upside in terms of long trades. So that's going to really, really help us get it right. And then it's going to be all about capital preservation to make sure we have proper risk management. So when I'm looking at this, I'm just going to draw it onto the charts so you're really, really clear. We've got this initial move up. And really, there's only 2 things it can really be. It's a wave 2 or A, and we don't know which one it is right now. Why? Because wave 1 and A's, sorry, I mean 1 or A's, not 2 A's. 1 or A's, they look the same. So there's no real way of telling which one. So it's actually best practice to write 1 or A. Down here, it looks like a 2 or B. Now, the same applies. A wave 2 and a wave B pretty much look identical. So what we're telling ourselves right now is two things, and we're gonna use the momentum indicator to bet on. We don't need to know the key secret here, because most people get too caught up on being right, being wrong, and so on and so forth. We don't need to know. We just need to be on the correct side of the market, and there'll be times the trend really takes off, and there'll be times it doesn't take off, but we just make a small profit, we break even, or we take a small loss. But when it takes off, we make large profits. That's going to be the name of the game that we're playing over here. So if it is a 1 and a 2, then what will tend to occur is this will be a 1, a 2, and then a 3 will be a continuation. And then in hindsight, this will be the bottom. So we want to look for that opportunities in a logical, mechanical, non-emotional way, stack the odds in our favor, and is acceptable capital exposure. What do we risk to find out if we're right? But the immediate, because of the momentum, look at where the momentum is right now. This is called overbought. What that means in English, in layman's terms, is there's these two lines that I use, the 75 level and the 25 level. When the blue and the red line are above the 25 level, it just says that there's probably going to be a local top at some point. Now, we don't know if it's going to be a wave 3 or a wave C. We don't need to know at this stage. That's the important part. So on the next bearish reversal, we can look if there's any short trade opportunities, because, again, I'm going to draw it like this. I'm going to write it like this, because if you're not used to Elliott waves, by the way, next week, keep close tune. Make sure you like, subscribe, hit the bell notification. I'm going to be launching my new crypto trading masterclass that's going to go into a lot of detail on how to do pattern, price, time, and double time frame momentum to really stack the odds in your favor, where you can become the casino. And we've got a lot of jam-packed goodies, so you want to make sure and the early adopters, we've got some special things as well. So make sure you're aware of that. I think we're going to launch on, it's early next week. Let's just call it early next week. So here we're going to call it 3 or C. Now, if you're not used to Elliott wave, market tends to move in 5s and 3s. So what we're always looking for on the upside is a 1, 2, 3, 4, 5 and an ABC correction. And then on the downside, it's a 1, 2, 3, 4, 5 and an ABC correction. So here, when we're looking at the first 3 waves of any market like this, I'm going into a lot of detail here, but sometimes you just, everything is difficult before it's easy. That's just the nature of life. But here, what we're saying is, we don't know if it's going to be a 3 or a C, but we can look at the momentum. And if we get a bearish reversal where the blue line goes below the red, then we go, right, we only want to be considering short trades. Then over the next 3, 4, 5 days, the blue line will be down here and the red line will be down here. And at this phase, we want to check out the pattern and price position to see if there's any long trade setups, because there's a couple of factors that we need to take into account. So I'm getting quite detailed, right? But don't worry, when I launch my masterclass next week, it's going to break some of this down. So if you're brand new to this, it will make much more sense. So what we're looking at over here is a potential correction. We got this big move down. Most corrections, the most common, most typical, is this 50% level. Basically, we've measured how far this price movement was. We've done a retracement of 50% up to this point over here. This is the most common. The typical minimum is 38.2, but this is more common. So ideally, we would want Solana to reach this point over here, and it looks like it could be a potential A, B, C correction in this zone. If we get a daily bearish reversal, then we can look for a logical entry point to see if there's going to likely be a continuation to the downside, but to have really tight risk management. But again, I'm going to finish on this. If I just zoom out like this, keep in mind that more often than not, when we get a corrective pattern like this, overlapping waves, more often than not, the previous low gets exceeded, and this is the case. So that's also something that we're taking into account. There's a few other factors as well, but the key is to not get fixated on being right. You need to be like a basketball player. You take the shot. You need to be like the casino, which has the edge in its favor, and it does many, many bets. And our job is to get the edge in our favor, trade the edge with tight risk management so we can protect ourselves from the downside. Hopefully that made a lot of sense. So if you want access to this chart and this analysis, I will be updating it as more information unfolds. But I'm looking for the next bearish reversal and then to see. In fact, I'm gonna share one more thing with you. This is how you stack the odds even more in your favor, right? So I'm on an hourly chart now, and an hourly chart, and let's just say we get the daily bearish reversal, right? The momentum points down. Do we go short straight away? Well, sometimes that's highly risky. So what you could do is this is a nice, it's not really a trick, but it's just a stronger edge, is wait for the market to tell us. And what we would ideally want to see is a 5-wave impulsive movement on a very short-term time frame. This is an hourly chart. And then ideally, if it did a pullback on an A, B, C like this, not saying it's going to happen, but if this occurs, not only on Solana, but any cryptocurrency, what you could do is you ask yourself the question, what should the market not do if it's going to continue to the upside? And that is the same thing as a short trade entry. So one of the things is it should not overlap into this. So that will be, it's called a pattern reversal signal. It shouldn't, definitely not take out this low over here. That's another entry point because that would indicate weakness. So what you simply do is you put in an order on a swing low. And then if the market and the stop loss above a swing high, if the market then triggers us in, this represents our risk. You know, a good amount is normally 2%, basically to find out if we're right. But then what you do is this, right? And if you can understand this, you'll just do incredible over the weeks and months and years to come. Let me just clean this up. And I'm just going to move this to the side over here. What you do is this. So you wait for the market to tell us if it does a 5-wave impulse to the downside. This is indicating selling strength, right? It's an impulsive structure to the downside. Wait for some type of correction. Doesn't always occur, but 50% of the time it does. Then ask yourself, what should the market do if it's going to continue on the downside and not do if it's going to continue to the upside? And one of the easiest ones to identify is a swing low. So if this goes down, we put a stop loss up here. So this is our entry. But then what you do is this. You literally say, what's the minimum that the market should do if you're wrong? Now, stick with me on this, because if you understand this, I'm telling you, your risk management, your capital preservation, because your first objective should be long-term survival. Second is steady equity growth in terms of your portfolio is growing, your money's growing over time. And the third is high profits. If you focus on high profits, you're going to take too much risk. I know people, I've heard of people taking, risking 10%, 40%, the whole account on one trade. That's suicide. We're going to only risk, ideally around 2%. And we can find out if we're right. But we also want to know is let's get out of the trade early if we can see indications that the market's going to reverse to the upside. So what do we do? Well, what's the minimum that a market should do? Even if it's looking like this, remember we use the term 1 or A, 2 or B? Well, this move to the downside could be a 1 or A. This move to the upside could be a 2 or B. I'm going to write it like this. Hopefully it's making sense, because if you can understand this, I'm telling you, it's a game changer. So then we say, right, what's the minimum that the market should do? I can actually draw some fib levels here. The minimum is, let me draw it over here actually, is this movement, this 1 or A, if we measure it and we project it forward from this 2 or B, and the key ratio that's most common is this 100%. This is a really, really key ratio. And what you do, there's a few other things you can do as well, which I'm going to be sharing with you in my masterclass next week, is if this price is reached, even though we anticipate bigger movements to the downside, if this price is reached, we start to take half of our position. Let's just say you got $1,000 into this. We take half of that $500 risk and we start managing it by trailing a stop loss. We want to take some early profits in this region and then keep your second position or second part of your position and move it to entry. So what that means is you're locking in profits and your second position becomes risk-free. And what that does is it takes all the pressure off. That's me drawing with a mouse. It takes all the pressure off of you trying to force a trade, so you just can relax and just let the trade unfold. So that's got a lot of detail, but I think you're going to enjoy. If you enjoyed that, you'll enjoy my masterclass. So make sure you download the chart. I'm going to finish on a quote. Let's go with a quote from my book, The Extraordinary Venture Capital Opportunity, How to Invest Like a Pro. I'm going to go with chapter 2. Chapter 2 is really, really relevant. It's Warren Buffett, right? He says, rule number 1, never lose money. Rule number 2, never forget. Rule number 1. By the way, you can now download my book for free as well. Description link. I think you enjoy it, get massive value from this. But what we just did was a practical application of those 2 rules. Rule number 1, never lose money. That's inevitable. You're going to lose money at some point, right? That's just the nature of trading. It's the cost of doing business. So don't get too caught up on that. But with proper risk management, we can minimize the losses. And even if the trend doesn't unfold our way, we can make some profits and lock in some profits as well. Really, really important. So like, subscribe, hit the bell notification. My new masterclass is coming early next week. So watch this space. You're going to absolutely love it. We're going to take your trading to the next level with momentum, pattern price, and Fibonacci time.